If you believe you need thousands of dollars to start investing, you've been misled. That lie keeps the average American on the sidelines. Today, we shut down the excuses. I'm giving you the ultimate roadmap to build real, generational wealth starting with just $100. My mission is simple: to transform you from a consumer into an owner. We're going beyond theory. We'll cover the 6 actionable methods, the essential tax strategies, and the exact accounts you need. Pay attention to Method Durchsagt 5. It's the single best way to ensure your money grows 100% tax-free for decades. Before we dive in, a crucial disclaimer: I am not a financial advisor. I provide education and entertainment. Investing involves risk. Always consult a professional. Now that we've covered the rules, let's start with the cornerstone of modern investing. Core concept. Index funds are the foundation. When you buy an ETF like VOO or IVV, you are buying a tiny piece of the S&P 500, the 500 largest publicly traded companies in the US, like Apple, Amazon, and Tesla. You are instantly diversified. The Buffett bet. Why is this the best choice? Look at Warren Buffett's $1 million bet. He wagered that the S&P 500 index fund would outperform a highly paid hedge fund manager over 10 years. He won. Simplicity beats complexity almost every time. Crucial detail: expense ratio. When choosing an ETF, look at the expense ratio. This is the annual fee you pay. If it's 0.5%, it will eat your retirement. Look for funds with ratios under 0.05%. This is why commission-free brokers are key. Step 1. Open your account using the links below. Core concept: fractional shares allow your $100 to buy pieces of expensive stocks. You are no longer restricted by high share prices. Your $100 can buy 10% of Tesla, 15% of Microsoft, and 75% of a great index fund. Building a starter portfolio. Use your $100 to immediately diversify across sectors. Allocate 40% to an index fund, 30% to solid tech, like Microsoft to Google, and 30% to resilient consumer goods, like Coca-Cola, Costco. This is balanced investing. Warning: meme stocks. The trap with fractional shares is that it makes it easier to chase meme stocks or over-speculate. Remember, you are an investor, not a gambler. Stick to companies with a strong history. Core concept: this is where your emergency fund belongs. Stop settling for the 0.01% APY your legacy bank offers. A high-yield savings account, Hawaii SA, currently pays 4.5% to 5.5% APY. That's free money just for holding cash. FDIC protection. The most important feature is FDIC insurance. This means the U.S. government guarantees your money up to $250,000. Your principal is completely safe. This is not investing. This is smart cash management. Taxes and the 1099 on INT. The interest you earn is considered ordinary income and is taxable. You'll receive a 1099 INT form from the bank every tax season. This is crucial for U.S. tax filers. Core concept: dividends and DRIPs. This is how you generate true passive cash flow. When a company pays a dividend, a DRIP, dividend reinvestment plan, automatically uses that cash to buy more shares. This accelerates your compounding. Dividend aristocrats. Focus on dividend aristocrats. Companies that have raised their dividend every year for at least 25 consecutive years. These are stable, reliable giants. This strategy is ideal for a $100 recurring investment. Qualified versus ordinary. The U.S. tax code differentiates between qualified dividends and ordinary dividends. Qualified dividends are taxed at the lower capital gains rate, making them highly efficient. Always check your investment source. Core concept. The Roth IRA is the single greatest retirement account for young investors. You pay taxes on the money now, but all the growth and all the withdrawals in retirement are 100% tax-free. This is financial freedom. withdrawal rules, and the 5-year rule. You can always withdraw your contributions, the principal you put in, at any time, penalty and tax-free. However, your earnings must follow the 5-year rule and age 59.5 rule. Knowing this rule is essential. How to start with $100. Open your Roth IRA with a discount broker. Links below. Invest your $100 in an index fund inside the Roth IRA. This is maximizing your dollar. Check your income limits for eligibility. It is income restricted. Core concept: micro-investing, e.g., Acorns, Stash. This is investing for people who think they have no money to save. The automation does the work. These apps automatically round up your daily purchases to the nearest dollar and invest the change. The trade-off. The benefit is consistency and discipline. The drawback is that the monthly fees, 3.5, can be high as a percentage of a tiny account. You now have the 6 definitive methods to conquer the market with just $100. The key takeaway is consistency and time. Stop listening to people who say you're too late or too broke. The time to start is literally right now. The hardest part is the first step. To make it easy, I've linked all the best beginner-friendly platforms mentioned, including their current sign-up bonuses and free stock offers, in the description below. Use those links to open your first account right now. Like this video if you learned something new, and subscribe for your weekly masterclass in personal finance.